Hi, this is James Shogue at Westpac with our end of day report for Tuesday the 12th of June. It was a pretty choppy day on equity markets today, with the major themes being growing market disenchantment with the notion that the Spanish bank bailout, which might cost up to 100 billion euros, growing disenchantment that it would successfully rule a line under the sovereign debt crisis. There was some economic data today which was a little bit softer, mainly out of the US. We saw the National Federation of Independent Businesses Small Business Survey for May, which was down slightly, and the first measure actually of consumer confidence for June, which fell a couple of points. But the other point was that well-known Federal Reserve dove, Charles Evans from the Chicago Fed, he was interviewed and saying that he thought that any form of further stimulus would be appropriate for the US economy, and that something should be done, particularly to help improve the labour market. However, we also had Fitch announce the ratings downgrades for 18 Spanish banks, and they said, and I quote, that other Eurozone country ratings remained at risk, including those of the remaining AAA nations in Europe. We had UK industrial figures released today. They were flat in April, but the factory sector was actually down 0.7%. The only reason the numbers overall weren't negative was that there was a big jump in utility output as March's mild weather turned pretty miserable in April. But really the main themes were disenchantment with Spain and the bailout there, concern about the Fitch downgrade of the banks. It's a related story, of course, and their comments. But offsetting that, slightly softer US data and that talk about further Fed stimulus. Now, Evans is only one member of the 17 on the FOMC. His comments are at the more dovish. The Vice Chairman recently did talk about the possibility of further easing, but with Europe continuing to deliver bad news, the news on the US economy not particularly flash, it's perhaps the more dovish comments that are resonating the most with the markets. Although we did see markets in positive and negative territory quite a few times today, at the European close, the London market was up 0.75%, the French market up 0.1%, the German market up 1/3%, the Spaniards managed a 0.1% gain, and it was only the Italians that were still down around 0.75%. On bond markets, the 10-year bond yield in Spain hit, I think, 6.78%, which is the highest that it's been in modern times. The Italian bond yield at 6.25%, not too far behind. Certainly both those governments are currently facing yields that they will find unsustainable over the medium to longer term in terms of financing their ongoing debt and budget deficit positions. In the US lunchtime, the Dow's now up around 0.75%. It was in negative territory earlier on in the session, but that easing talk from Evans seems to be the main driving factor. Commodity markets have seen copper prices down just a little bit, 0.1%, but oil prices up 0.6% today at $83.18 a barrel, and gold prices are up 1.25% at $1,616 an ounce. The Aussie dollar, it's at 99.3 US cents at the moment. It's been mostly on an uptrend today, but a few wobbles around the Fitch announcement and around some of the data. In Australia, it's Glenn Stevens who's speaking. It's just after midnight, I think, London time, so in the morning Sydney time, and he might provide some further enlightenment on where he sees the main global risks lying and what that might imply for Australian monetary policy. We also put out the latest consumer sentiment index along with the Melbourne Institute. That's the June reading. A survey was taken June 4 to 10, so an up-to-date read on how you guys in Australia are feeling. Okay, I'll be back tomorrow with more.